Good day, everyone. Good day, my peoples. Dan, Sharpe Trade. Today is Monday, so Monday we do a Sharpe income project entry. A project that we're running for free here at Sharpe Trade. It began with only 500 bucks. The rule set is only $25 a week, and it just generally shows in real time. None of this before or after garbage, you know, where it's like, oh, I would have picked that one. No, actually translated it out onto something real. How would this work out over time, right? And growing, specifically the objective is an income account. Now lately with the Sharpe Income Project, we've talked that, yeah, the income process itself has been doing fantastic, right? The income process, because the project's made up of two different segments, sort of a trading segment as well as an income segment. And there are very real reasons for that. Folks who have got the short-term trading course know why that is. But we've talked, yes, the income process, if you look at the here and now, the income process has been doing really, really good. However, and I think we mentioned this last week in the video entry last week, that is not what I'm focusing in on. And as a matter of fact, I would like to focus in on the exact opposite, which is the downside risk. Now, in order to understand, you know, sort of the downside risks, you sort of have to understand the process you're using. And I would say with the process we're using for income, you know, for just buying income assets, you have to think about it in terms of worst drawdown and at any moment what you can expect to lose, not gain. Far, far, far too many people get involved in investing and trading, and if they're, you know, up a little bit, they just cheerlead that performance. Oh, look at how fantastic we're doing. Look at how fantastic we're doing. I would say focus on exactly the opposite. Focus on how much you can lose. Not to where you obsess and it just grips you with fear or anything, but when you move forward, and especially when you've been doing this for some time, you know, I've been trading, it's going to be 21 years now. That's just, it's exactly the wrong thing to think. You know, we said that in the video entry last week. You know, the market rallies and everybody's like, the Qs right now. I think I got a chart of the Qs up behind me. The Qs have just been rallying and rallying like nuts, even more so than the SPOOs. I mean, there hasn't been like even a 1% pullback. Not even 1%. So I would say that one needs, when you're enjoying a time like this, start to think about the downsides. Yes, as I said before, I know the process, so you got to expect maybe 35% drawdowns at some point. There is discretion involved with the process that I'm using. I will say that. With this income process, there is discretion. There's capital contributions, so we can sort of mitigate that blow. But for anybody starting off an income process, we don't like to really give advice, but I would say this, you know, from what, just sharing the way I think about it, expect to lose 35% off the top. Even if you don't lose 35% off the top of whatever you've got dedicated for income, expect to. Think about it in those terms. So don't just sit there cheerleading, yay, yay, look at us, we're so fantastic, we're so fantastic. If you have positive expectancy and you grind it out, the upside's going to happen. The way you make sure you don't lose that is you focus on what you can lose and what you can do to mitigate that. We don't avoid risk. We said that in the money management series. We have a free playlist, a free course, if you will, on sort of the mathematics of trading at Sharpe Trade. And we said that we don't seek to avoid risk. We just seek to understand it. You know, I think it's entirely the wrong attitude to take a look at risk and how everybody talks about risk and say, yes, you always have to avoid risk. It's like, no. As investors and as traders, we seek risk. We just seek to understand it, sort of strangle it a little bit and try to get it to do what we want, but understanding you never can do that completely and totally. So we're running this project for free, publicly, and anybody can look in. So I think it's very important for Sharpe Trade to say, don't look at us during time periods like this and it's like, well, I'm just going to pour into what these Sharpe Trade guys are doing because they're up big. Because that's not where my focus is at. I would say if somebody starts their own income process, and especially for you folks that have gotten the short-term trading course and the valuation investing course and sort of can really see the process of why I'm making the moves I'm making, focus on the downside. Anything that you've allocated, I would honestly say just just think about, okay, this much is allocated. I have to be psychologically prepared to lose 35% of that. I have to accept that internally. And then you move forward from that. Okay. As far as this week, I don't really see anything to do, and it falls in line. I was telling clients of the Sharpe report this last night. It falls in line with everything right now. It's very hard to find trades. Low volatility. I love selling options. I'm not seeing a lot of that. I'm not finding a lot. And the same carries true in this income process. I think several weeks ago I said I think Medtronic was an area where one could nibble in a little bit. We didn't do that for the project because just the capital wasn't there, but it's the same thing this week. I'm just not seeing anything. Everything that's good value has had its run. So sometimes you just have to learn to like take your hands and learn to just sit on them. And many processes that we have, we're sort of staring at that sort of scenario. Just learning to sit on your hands. So I think if somebody had a lot of cash, maybe a nibble. So I'm not talking a full-size allocated position towards something like PFF, but I mean just a nibble. So if like you have in the Sharpe Income Project, all the positions are equal sized at the time of purchase. That's very important to make that delineation. See, I'm giving you little pieces of the process here, just little pieces. But they're all equal at the time of purchase. And I would say like if there's a full-size position allocated, then make it like 25% of that. If there was a ton of cash, maybe a nibble buy-in on PFF. But that's the only thing I'm seeing at the moment. For the rest of it, take your hands, sit on them. Either that or assume the enjoy it stance. You remember the enjoy it stance? I've got my coffee here, so I'm not really sure if I can do this. You know, the enjoy it stance, you take your two hands, you lock them together, you put it behind your head, and you lean back. Enjoy it. That's what you got to do right now. Just enjoy it. So, for now, that has been the Sharpe Income Project for this week. And that has been what it's always been. It's simply been our thoughts. It's all it ever is. It's our thoughts, not yours. For whatever the heck day it is, as always, stay safe, trade well, and remember that love doesn't cost a dime.